That was a pretty excellent day two from yesterday's rally, extending it basically no pushback. Pretty great 48 hours. The important stuff working. Nvidia did finish shy of 120. Want to see it be able to hold through and get to that level on the other side. Dabbled with it today. Maybe that could have ended a little bit stronger. The red light's still there. I think we might be in a situation where there may just be no yellow light for stocks. If we need to change, then red to green. Here's why. Everything else I think fits good. Bonds generally keep catching a bid. Dollar's been chopping. Crypto's like trying to keep up, but with gold breaking out to fresh highs, stocks ramping up, BTC still looks sluggish compared to everything else. So that's all consistent. But the chart for S&Ps gets really tricky here. Tomorrow should be a little bit tougher just because simply the chart. We spent a week going back and forth between 55, 80-ish or so, kind of where we got into today, but really the meat of the range was from 56 up to 56.50. So because we were there for so long, before we broke down, there was so much sideways action. And remember that we finished last month with quite a reversal. That green bar, that candle up there, that was the last attempt to break out from that range above 56.50, the rejection, and then the sell-off that happened afterwards. To me, it's basically a binary situation. We either go through that range, green light back on, or we don't, and the red light stays on. Could we get stuck? Sure, absolutely. Why not? Do we go and get magnetized into that old range? Absolutely could happen, but at this point, the market's got a lot at stake. And we did already test that level over and over. So it seems like rejection or at least some pushback, given that there's not a lot on the calendar tomorrow. You got sentiment in the morning. Maybe it moves the market, but this is a market that has needed pretty fresh catalysts to go here. Jensen's speech about the Blackwell was sort of the unexpected catalyst. The last 2 days here, this has been about as pure of an Nvidia trade as you can get. And that's where the fact that it ended under 120 and that we're coming up on potentially a more resistance-driven range that's going to be harder to chew through, seems like tomorrow might be a little bit trickier. Because again, this stock market rallied the last 2 days because Nvidia saved us basically. And by the way, that works just fine. I've argued for a long time that the better version of the bull market is the Nvidia-led one, but let's be real here. It still is a massive fulcrum upon which this market will shift. We did get some data. We got inflation. Okay, we got jobless claims, but everything was basically in line. If you look at the way bonds have been trading, there's actually not that much excitement there. The bond light I'm watching carefully because yields are trying to creep, but they're still in the range downward. So yes, the green light for bonds, yields trending downward, but it has slowed. We've had some bullish push or bearish pushback in bonds, and the yield's been creeping up a little bit, but it hasn't made a big move. So the action in the last 2 days here has not been macro. It really hasn't. It's been Nvidia. It's been the revival of tech. Oracle earnings helped. So that's where you basically watch Nvidia, see if it gets through to 120, and then see if the overall S&Ps can hold up back to that 5,600 and above level that we were talking about. Should be an opportunity for bears to push back a little bit tomorrow, given that sentiment probably is not going to be the type of thing that's going to move the needle from a macro perspective. It's just watch tech, I think, basically. That's been the last 48 hours. I'll see you in the morning.